All right. Happy to have my friend Larry Lepard here with me today. This appearance almost didn't happen. We got into a little bit of a domestic dispute this week, actually, which was odd. We've been friends for a very long time, me and Larry, and I respect him more than a lot of people in the industry, most people in the industry. But I think I pushed his buttons this week, and he almost didn't come on, but now he's here. So how are you doing, man?
Chris, I apologize for that. Maybe I was having a bad day. Look, I mean, we've been friends for a long time, and I have a huge amount of respect for you as well. And I'm gonna in this thing, I'm gonna convince you that we're okay with MicroStrategy. But before we get to that, you know, the general thrust of the article you wrote about all this was really great. You talked about how being skeptical, doesn't make you a doomer. And you're absolutely right. And you cited a number of cases in your skepticism, MicroStrategy and SpaceX and just so many things. And it's really hard for those of us who've been in the markets more than 20 years to look at these markets because they're Franken markets, right? And that's because of the Fed and the Fed printing all this money and everything's going up, not because the values are going up, just because the unit of account is losing so much value so quickly. And so it makes it very hard to look at traditional metrics and make them have any sense. And people who haven't been in the markets as long as us are sitting there saying, hey, how come you guys are being such doomers about these valuations and everything else? It's all great. And we're kind of like, yeah, okay, just wait. So I think, the reversion to mean is yet to occur. It may never occur, but I think it will if history is any sort of a guide. And I think Jeremy Grantham made a good case that history is a good guide. And so, it's tough to be in these markets with 40 years of experience, which we both have, and realize just kind of how out of whack everything is right now. And but the MicroStrategy thing was more specific to the actions of the management team, and we should hash that out because it's worth having a debate. I mean, and we can look at the facts very clearly. And as we talked privately before this, I mean, I don't disagree with you on some of your concerns, but I still fundamentally am a bull, and I'd like to kind of clear up, the concerns or doubts you have, because I think logically, if we look at the facts, you will see that the logic of, this is going to go into a death spiral is just, there's not facts that support that a foundation for that. So we should go there.
Yeah, I think a good place to start is really talking about what I said and what I didn't say.
Right.
I never said it was going to go into a death spiral. I was not as bombastic about strategy as somebody like Peter Schiff has been, who is basically calling for its imminent collapse.
Right.
And in fact, when they put out the new strategy now that they call the Bitcoin monetization strategy, which just means we can be sellers of Bitcoin, what I wrote, in fact, was that it probably buys them significant amount of time.
Right.
However, what I argued was that management was talking out of both sides of their mouth, which they have been doing, that, layering cash outlay obligations on top of the collateral Bitcoin. I mean, they're essentially a Bitcoin treasury company that has started to layer financial products and capital outlay on top of their collateral, right? So
exactly.
That's what these preferreds are. That's what this dividend is. The preferreds exist under the notion that Bitcoin is going to keep appreciating 30% per year. And so they'll strip the volatility out, as Saylor says, and spit off 12% a year, because they found this 30% a year wellspring, and they're going to keep some of the water and they're going to hand out some of the water to shareholders.
Perfect.
Right. So we understand things the same way. I never claim that it's going to be going into a death spiral, but what I did say is there's a lot of, there's a lot of concern with management's credibility for saying one thing and doing another. Now, in February, Saylor was on CNBC saying they're not going to be sellers. And now all of a sudden it's 4 months later and they're sellers. So whether or not the company goes under or it goes up 10x from now, for me, that's a demerit in my book. I've spent the better part of my professional career, doing research on the short side. And, looking into every deceptive dirtbag shithead management team that there is, and they have a lot of things in common. One is they change the narrative when it doesn't work for them. The second is they start to remove financial metrics when they don't run in the company's favor. And that was something too that I found to be deceptive. The fact that Bitcoin yield has been touted over and over and over again by the company. Fong Li has talked about it over and over as the main purpose of the company. And then when that doesn't serve them, as soon as the yield starts to decrease, as it did over the last month, Saylor just stops referencing it in his tweets, which he was doing prior. And so those are the kind of things that I think are red flags that I point out to my subscribers.
Fair enough. So let me counter that. Okay. First of all, they still have a positive Bitcoin yield for this quarter. And I think the goal of the company still is to increase the Bitcoin yield, which is to say to grow the Bitcoin per share. And I don't think, what you call deceptive, I call adapting to market conditions. Okay. Basically, their goal is to increase the value of this company and to increase the ownership of the Bitcoin and to increase Bitcoin yield. And it's not like they stopped talking about it, but what happened, what they learned, the market event that happened that led them to stop talking about Bitcoin yield and talk more about, the liquidity they have, the cash flow management ability that they have, the ability that they have to sell Bitcoin to service these obligations they're taking on. That all occurred because of a liquidity cascade that took place in Stretch, right? So we all know, you bring up a chart of Stretch, what you see is, this was, they've raised close to $12 billion in this thing, I think is the number. And, it's basically, it went for a dive. It went, people got nervous about the price of Bitcoin. They thought it was going to break to new lows when it hit 58 or 59. They thought that he wouldn't be able to service the 1.7% dividend, which if you look at the math, the balance sheet, it's kind of patently absurd. He's got
it's a $1.7 billion dividend. It's not 1.7%. It's 11%.
It's a $1.7 billion dividend on an enterprise value of 52 million of Bitcoin that he's got, plus another 2.6 million of dollar reserve. So he's got 54 billion of things that he can use to basically service 1.7. It's very hard to see how there's going to be any kind of a problem, coming up with 1.7 when you're talking about 54.5 billion of assets, right? It's just, Bitcoin's got to go down, 60, right?
Yeah, that I agree with you. Like, I don't contest that. If there's one thing that I think we could probably stipulate that makes both of our points, and really the fact that I'm trying to get across is the larger the cash outlay obligation becomes and the lower the price of Bitcoin comes, the far more risk there is to the company.
Oh, there's no doubt about it.
Right. Then there would be if this was just a company sitting on unlevered Bitcoin. And that's the only argument that I'm making, which is that the plunge could accelerate quickly. You use the term death spiral. I try not to use terms like that, but shit could hit the fan to the downside quicker because he has these capital requirements, and because the higher he raises the dividend and the bigger that obligation gets and the more debt they take on, any type of cash obligation or leverage they put on top of this pile of Bitcoin, the bigger that gets, the smaller the move has to be to the downside to trigger sales,
but you're being hyperbolic.
No, I'm not.
Yeah, you are. Because the balance sheet right now, basically all he's got to do, all the company's valuation has to do, he's got to sell $1.7 billion on, I'll do the math, on $54 billion of value, 1.7 and 54. He's got to take 3% of his value every year to service this dividend. So
at current prices.
So say you're a common shareholder and say, he either sells common shares or he sells Bitcoin, to pay the dividend. All that has to happen is the balance of the Bitcoin that he owns has to go up 3%, and you're in the same position. And for it to become a bigger number, let's say Bitcoin fell in half from here, which is unlikely, but it could. Let's say Bitcoin went from 60 to 30. He's got to come up with 6%. So even that number isn't 6% is not something that's going to, completely destroy the company. I mean, I've seen, small gold companies raise 10% or 20% of their equity in one financing, and they do it repeatedly over and over and over again. So, I mean, this is not, and that's assuming Bitcoin falls 30%, which is well below the models that show, that we're at the lower end of the range. Bitcoin's only been this cheap, Chris, 3 or 4 times its entire history. I mean, it's right at
cheap relative to what?
Relative to its 200-day moving average or relative to the power law model, both of which are meaningful. The power law model, basically a log of time and a log of price back from inception, describes with a 96% R squared the price of Bitcoin. Okay. And it falls within a band, and that band is that band varies around the average. What the mean right now is about 134,000. Okay, so we're already at a very steep discount to the mean power law valuation of Bitcoin. But to be fair, 3 or 4 times when we've had big drawdowns and bear markets in Bitcoin, we've gone right to the bottom of that model, which is basically about 1/2 a standard deviation below the mean, tends to be about 1/2 of the existing price. And that's where we're at. We're at 53% drawdown right now, which, by the way, is smaller than all the prior drawdowns, which I can go through for you in just a minute. But the point is that even if Bitcoin were to fall 50%, this company is not in trouble. I mean, it's not in trouble. I mean, the only obligation, they've got 2 obligations they've got to meet. They've got to pay back their debt, which is $6 billion. Okay. And that's, by the way, it's layered out over time. And they've got to meet the $1.7 billion of dividend obligations that they have today, assuming they don't grow, nothing grows. And so that's really kind of the preferred, as they don't have to pay it back. And by the way, I mean, they could actually they're legally allowed to stop paying the dividend and let it accumulate. Okay. Now, of course, that would trash the preferred holders. But they could do it. And so the point is, you got a company that's got a $60 billion market cap with $6 billion worth of debt. So
right. And a $1.7 billion annual cash outlay.
And a $1.7 billion annual cash outlay that you could stop if you had to.
Right. So, and all things being equal, if the price stays where it is,
right,
and it trends according to the power law model and all of the technical analysis that you're looking at, and the guys over at Fred Krueger's Spaces were talking about the other day. If everything holds up according to the data,
but it's better than that, Chris. It could fall 50% in value, and you're still fine. It could fall. Bitcoin could go to 30, and this company is perfectly fine. I mean, you'd have at a $30,000 Bitcoin price, the company would have a $30 billion round numbers, market valuation. Okay. And they've got to make a $1.7 billion payment. I mean, so what? I mean, and then, by the way, they can stop the payment. So the whole notion that you give a platform to a guy who says that this thing is going to go into a death spiral, a guy who's been dead ass wrong about Bitcoin for 16 years, a guy who's cost thousands and thousands of gold holders millions and millions of dollars of potential upside. I mean, I'm like, what? What's that all about? And so Phong Le decides to change his messaging from, we're going to grow Bitcoin per share, which, by the way, they still have year to date. They grew their Bitcoin 25%. They grew their shares 19% for the 6 months just ended. So they are still growing Bitcoin per share. Then they go out and they sell 3,000 Bitcoin, which, by the way, 3,500 and some Bitcoin, which, by the way, is 0.3% of what they hold. And everybody freaks out that we're going to get into some liquidity cascade, or that's going to cause the market to turn. I mean, Chris, this thing, Bitcoin trades $27 billion a day. $27 billion. MicroStrategy is 4% of the total outstanding Bitcoin supply. And, Bitcoin's going to make it whether MicroStrategy makes it or not. I mean, one of the narratives that a lot of people have been saying is, well, MicroStrategy is now a seller and they've been the marginal buyer, which isn't true. And that therefore, now that they're a seller, the marginal buyer has gone away and the thing's going to collapse. That just doesn't make any sense. There's absolutely no sound business or economic logic to support that argument. Zero. It's ridiculous. I mean, Bitcoin trades, on any given day, Bitcoin is trading $20 billion worth of value. MicroStrategy is trading $2.8 billion of share value per day. And we're talking about, we're sitting here arguing that they're not going to be able to come up with $1.7 billion to pay a dividend. I mean, it's just absurd. It really is. The facts just tell you it's absurd. And so but for Fong to then change his metric from Bitcoin per share to, we are going to be very flexible in our balance sheet management in order to make sure we cover these obligations. Because what the market taught them, what they just learned, is that they probably reached the limit of leverage and in both the preferred and the debt that they can handle during a Bitcoin drawdown. That's what they just learned. I mean, the mistake I think they made was they paid off some of the debt. They had a nice reserve built up, and they used some of it to pay off the debt, thinking that they could get it at a discount and the market would like the fact that they had less debt. And in reality, what the market told them, no, we liked it when you had more cash reserves, which is why they're now building the cash reserve. And they now got 17 months of dividend in the cash reserve. So,
let's just stipulate a couple things here.
Okay.
All right. Sorry, I got to move my mic back here for a second. Can you hear me okay?
Yeah, I got you.
Okay. So let's just stipulate a couple of things here first.
Yeah.
Okay. Fong Li is the CEO of the company that was out talking about the Bitcoin yield metric, right?
And by the way, it's still an important metric for them. It's not like it's gone away. He's just not focusing on it.
Give me a couple minutes here, okay?
Okay.
Give me a couple minutes to make my points.
Yeah.
All right. It's a metric that he was focused on. You can pull the quotes from my
absolutely
article that Saylor used to put in his tweets all the time whenever he acquired Bitcoin, and he surreptitiously left it out of his tweet. Just like he stopped tweeting, STRC's price at the end of the day, like he was doing every day when it was trading at par. We don't get those tweets anymore.
No, we don't.
So the point there is that they're being selective with what they talk about. That's the point. All right. And for me, that fits a pattern of things that I've seen in my past. I used as an example on the last podcast that I did back when I was looking at Herbalife many years ago. They used to put on the front page of their 10K their number of active members, and the number always went up every year. It was a higher number. And then one year they stopped putting it on their 10K. And the reason they did was because the number went down, or coincidentally, the number went down that year and they decided to stop disclosing it. To me, I don't like things like that. I like transparency, cut and dry, apples to apples all the time.
It's totally transparent. If you go to their website, the Bitcoin yield is still there. They're not hiding anything, Chris. It's all still totally there. If you ask Fong Li, how come you're not talking about Bitcoin yield right now? He'd say, because we've got a crisis in the preferred stock price, and it's much more important to focus on how we're going to be sure we have the capital to to restore confidence in the preferred.
It's not hyperbolic to point that out. I'm not saying anything sensational. I'm saying that management is talking out of both sides of their mouth.
No, they're not.
Again,
they are
yes,
not.
They are.
Not, Chris.
The headline on CNBC from February with Saylor. Here's the headline. MicroStrategy is Michael Saylor. We won't be selling Bitcoin. We'll be buying every quarter forever. That's the headline. And now they are
Chris,
selling Bitcoin.
Chris, has there been a net quarter where they've sold Bitcoin yet?
Well, yeah. First, it's going to be has there been a net? First, it's going to be we said we weren't going to sell, and then we are. Then it's going to be like, has there been a net week when we weren't sellers? Has there been a net quarter that we weren't sellers? Then it's going to be, has there been a net year where we've been sellers? So the point is, you can move those goalposts as many times as you want. You're okay with the fact that he said they're not going to be sellers, and now they are, and I'm not okay with it. And that's fine. We can have a disagreement on that. But to me, that's moving the goalposts.
Well, he still hasn't been a net seller, he's been a net seller in the past 2 weeks? And how much?
How about we just start with he's been a seller.
Okay.
When he said he wasn't going to be a seller.
Correct.
Right. Okay. So
look,
I don't think
there had to come a time. There had to come a point in time at which, you know, he had to, what he learned in the process. Okay, what I think happened is the market schooled him, and what he learned is that if he says he's never going to be a seller, people are going to short the living shit out of his stock, you know, in a speculative attack. And there's a point in time where, as a matter of corporate, you know, balance sheet management, if the stock is selling lower than the value of the underlying Bitcoin, the thing he should do that would be best for his shareholders would be to sell Bitcoin and buy the stock, right?
That's fine. I mean, if you want to retrofit what you just said to make an excuse for him, essentially, then that's fine. I just don't see it that way. I see him, you know, he has cashed out a lot in MicroStrategy stock personally. He's worth hundreds of millions of dollars.
Whoa, slow down. You've got records that show that Michael Saylor has been a seller of MicroStrategy stock?
I don't believe that's look at his Form 4s.
I don't think that's well. Yeah, he's obviously he and Fong both have, you know, programs that they put in place to sell stock to pay for the dividend, the stuff they're going to buy. I mean that, and
they've sold personal stock.
It's formulaic. It's basically a formula that they set up. I mean, we went through this on a tweet that you were embarrassed by, and you then subsequently took down. I mean, they both set. The one where you attacked them for Fong for selling stock, and in fact, Fong had set this program up years and years ago, where it's one of those, you know, I don't know what they call it, but it's a 10B,
like a 10B5 program.
Yeah,
but he's still selling stock.
Yeah, right. In order to buy more, in order to exercise options, it's not net selling stock, Chris. You are not sticking to the facts.
Let's see.
You were crafting. You were doing exactly what they're doing in reverse. You're crafting a narrative to fit your story. Let's look at the facts.
How about we look at Bloomberg and see what Michael Saylor has sold in MSTR personally? Michael Saylor personally cashed out approximately $370 million by unloading company stock, made possible by a specific stock sale agreement that allowed him to offload up to 400,000 shares. So he's made personal wealth off of selling MSTR shares, right?
Look, if it was set up in a 10B5 program beforehand, you knew he was going to do it, and I'm not sure that that's necessarily. I don't know if his net ownership of MicroStrategy has gone up or down over time. I don't have those facts right in front of me, but I know that when you attacked Fong for doing it, Fong had clearly said he was going to sell shares in order to exercise new shares given. I mean, when they're given new shares and they're about to expire, they need proceeds to exercise them, right? In the form of options. So,
okay, let's see, 45%. Yeah, the small Saylor's sales are their small fraction of his overall stake, but he has sold shares personally. I mean, I've seen the Form 4s. So,
okay,
look,
but I don't know this for a fact, but I believe he sold them in order to exercise the warrants he's given by the board. That's my guess. I bet if you match them up, that's what you'd find. So again, you're crafting a narrative, not necessarily based on the facts.
I don't know if that's necessarily true. I mean,
well, we'll have to. It's something we can investigate. We can see whether he's used the proceeds to exercise his warrants. But I know in Fong's case, that's what the filing showed.
This is his quote, Michael Saylor. For almost a decade at my request, the company has only paid me a $1 salary, and I've chosen not to be eligible for cash bonuses. Exercising this option will allow me to address some financial obligations as well as to acquire additional Bitcoin from my personal account. So exercising this option will allow me to address some financial obligations. So he's selling stock for personal.
All right, so Saylor has actually sold some stock. I mean, you know,
well, that's a big difference between that and me crafting a narrative, right?
Well, but in the case of Fong, you're crafting a narrative because you took down the tweet where I pointed out that Fong basically said, you know, it was a 10B5 to exercise warrants. Right?
Well, we can look to see how much Fong Lee has sold. But I mean, it doesn't matter. The point of the matter is they're talking out of both sides of their mouth. That's the point of the matter.
No, they're not.
And
they're not. I mean,
all right. Well, we just disagree on that. I mean, I don't know what to tell you, man. I mean, if you're okay with that, then that's fine. You know, like you said already, that layering this stuff on top of their pile of Bitcoin collateral, increases the risk, especially to the common, right?
Sure.
Right. Okay. So that we can agree on. Yeah. That's a lot of what I was.
Well, there's no question that if they get over leveraged, they're going to be in trouble if the price of Bitcoin falls.
So there's nothing hyperbolic about raising that point, and then there's nothing hyperbolic about the idea of a lot of the base bull case for this company is based on a lot of things that people don't talk about. Is based on the power law model holding up. It's based on the technical analysis. It's based on the assumption I keep hearing of it's only got to go up 3% a year. It's like, yeah, okay, but like, what if it doesn't? And this isn't like, we're not talking about the price of oil. This is a 17-year-old asset that, is nobody knows where it's going to be in 5 to 10 years from now. There's some great models. It's very easy to look back on what it's done over 17 years and then try to derive where it's going to be at a certain place in time. And I get all that, but all of this is based on the assumption, like you said, hey, it's already kind of drawn down as far as it's going to go, or it can't go to 30,000. And the fact of the matter is, you have one of the biggest owners here that's, again, adding leverage to its capital stack, who everybody kind of assumed was always just going to be a buyer, possibly shifting not just the market dynamic and becoming a seller potentially to meet obligations, but also kind of informing the market, that they're also sellers too. And you agree with me that adoption is everything, right? Like the size of the network has to grow in order for Bitcoin to grow, right?
That's correct. Yep.
Adoption. Right. So there's a huge psychological element, that the long-term success of Bitcoin rests on. People are they're going to have to want to adopt it in order for it to make it in the long run. Right. And so all I'm saying is psychology plays such a huge role here that these types of things can detract from, the overall groupthink relating to Bitcoin. And if the network does start to shrink, which it hasn't yet, those are situations that nobody's talking about. So you just have a giant layer after layer after layer of assumptions that this statement of they can easily meet their $1.7 billion cash obligation per year is sitting on top of. Just putting aside the fact that, I think that they're talking out of both sides of their mouth and you don't. But all of those things rest, that statement rests on top of all these other assumptions too. Well, and it would be one thing if they didn't have the dividend to pay and they didn't have debt to pay back. That would be one thing. I would have far less concern about things.
Let's just address that. One, they can stop paying the dividend, and two.
Yeah, but then who's then what's going to happen to the common and what's going to happen to the preferred shares?
Well, the common's actually going to probably do pretty well if they stop paying the dividend. The preferred
it will get crushed. That will be a major blow to the company credibility if they stop paying the dividend now.
Chris, they have Bitcoin that's worth $52 billion. Okay.
Yes, and if they stop paying the dividend, why would they do that? They would do that because the price has gone down ostensibly, right? And if you tell common shareholders and preferred shareholders that they're suspending that dividend, if they suspend that dividend, that stock's going to get crushed.
Not necessarily.
Who the hell is going to buy it then?
Well, because it represents a claim on the Bitcoin, and basically they could suspend the dividend until such time as the price recovers and the dividends accumulate, and then they just pay the dividend back, and you get the upside. I mean, the guy has built all kinds of upside optionality, and there's no way you can break it on the downside. No way. I mean, he's got $6 billion of debt. That's it, $6 billion. Okay, and it's got $60 billion of market cap. So for this thing to, I mean, you and Schiff and others have said this thing could become a negative cascade and it could fail. Okay. And in fact, it can't, because Bitcoin, unless Bitcoin goes down from here 90%. And if that's the case, yeah, it'll fail because it's levered. But okay. So show me some fact in the marketplace that suggests to you that Bitcoin is going to go down 90%. I mean,
I don't. I don't have a specific catalyst, but what I can say are there's risks that, people don't really kind of know how they're going to play out related to Bitcoin, not just adoption, but, all the quantum computing bullshit. And then also you have crypto as an asset class sitting at the top of an equity market right now. Like really, I call it the tip of the risk on spear that is the most overvalued that it's ever been. And we're kind of in unprecedented territory here in terms of equity valuations. And
well, let's distinguish between crypto and Bitcoin, because you're right. Crypto is extremely overvalued. It all should be going to zero. It's all pretty much worthless. But
okay.
Bitcoin is actually going to become a safe haven because it's digital gold. And
well, it might be. You're saying give me a scenario where Bitcoin goes down 90%, and I'm telling you, you're just admitting to me, okay, the rest of crypto is worthless, and that's fine. And what I'm saying is, right there, you have $1 trillion kind of pin that could prick the bubble that the equity market's in. And if people get into some type of deleveraging situation, because right now margin debt as a percentage of GDP is at all-time highs.
Sure.
People are having trouble with credit card delinquencies. Auto loan delinquencies are at financial crisis highs. You have student loan delinquencies off the charts. So the consumer is stretched, and the average retail investor is a gambler and is also stretched and not an investor. And all I'm saying is, if in your situation, half of the crypto market cap out there, which is something like $1 trillion, Bitcoin's probably like the other trillion. Right. If that winds up going to zero, as you predict.
I'm not predicting. I'm saying it could.
Okay. Yeah. Or as you say, is a possibility. That could very easily result. I mean, if the equity market,
look, Bitcoin could go down to 50 or 40. There's no doubt about that. I don't think it will, but it could. But again, I don't think the mathematics of this balance sheet suggests that even if that happened, the company's fine. I mean, the company's completely fine. It's just, you're talking about $6 billion of debt and a 1.7 dividend obligation that you can defer. So, I just don't see it. And more importantly, I mean, everyone views, that MicroStrategy has created this Bitcoin bull market. It really hasn't. I mean, I looked at a chart of the number of Bitcoin owned by the ETFs, and the ETFs, and it's interesting, basically that chart went straight up from the ETF inception in early 24. And what you see is that while this bear market has occurred and the value of all the money in the ETFs has gone down, the net selling of the ETFs has been very light. I mean, there were about 1.3 million Bitcoin in the ETFs at the peak, and there's close to 1.2 today. So it's not like there's been a lot of ETF selling. And so, adoption is kind of continuing, everywhere you go in terms of wallet growth and, hash rate and usage of the network, et cetera. So, what's going to change that's going to suddenly cause this thing that's really digital gold to die? I don't see it. I mean, I don't see the thing that's going to change. That's the, and by the way, we've been here before. I mean, we could pull up the chart that you and I shared before we started, which kind of shows you that.
Share that.
I mean, I think there's some interesting data points that listeners might benefit from hearing. I mean, we've had prior Bitcoin bear markets. Okay, the first one was in 2011. Bitcoin went down 93%. The second one was 2013. It went down 87%. 2018, it went down 84%. 2022, it went down 77%. This one's only down 53%. So what you've got is kind of a continued period of higher highs and higher lows. And if you look at this chart, you'll see that period in 18 and 19 and 20, and that was a long one. That was 2.5 years of kind of just bumping along the bottom there. And then the next one, the FTX one from 2022 to 2024, that was kind of a year and a half at the bottom. And so we're coming into another one, and this one could easily last into early next year, mid next year. But at some point in time, another bottom will be established, and it'll be higher than the 15K bottom and higher than the 4K bottom. And, we'll be going up the other side of this curve. And so it's not as if we haven't been here before. I mean, before I got on, I Googled or I chat GPT, Amazon and all the corrections it's had over 20%. And, it went down in the .com bust. It went down 95%, and then it went down 70 some odd percent, and then it's been down 50% and 40 and 30. And it's a similar thing in the sense that Amazon was kind of becoming the leader of, selling goods online, and this is a leader in digital currency. So they both have kind of a network effect. And so what's going on is you're seeing, slower and slower or smaller and smaller drawdowns over time. Now, I'll admit nobody enjoys having a 53% drawdown. And if you bought it at 123 and you're at 60 today, you're not feeling great about life. But, those of us who've been in it for a long time know what happens next, which is it goes to 180 or 200. And, when does that start? I don't know, tomorrow or sometime early next year or mid next year, but it's going there. So, unless suddenly the adoption stops, and I don't see any evidence the adoption stopping. So, I hear all these people attacking it, and to me, it's just typical bear market behavior. It's easy to kick an asset when it's down, basically in about another year, 2 years, everybody, look, to me, there's an extraordinary upside optionality in this thing. It's the most asymmetric thing out there right now. It's more asymmetric than gold. Call gold, let's say gold's at 4,000 right now. Do I think gold's going to go to 12,000 in the next 2 years? No way. That's a three bagger. But do I think that this is going to go from 60,000 to 180 in the next 2 years? Absolutely. I really do. And so, and MicroStrategy is just a levered version of that. I see MicroStrategy going to 200 to 400 to 600 to 800, and that's just with MNAV staying at 1. If you expand the MNAV multiple, which would happen if in a bull market, it could go higher. So, to me, you're only looking at the downside. You're not considering the upside optionality in these things. And
that's not true. The whole world is considering the upside optionality in it. And all I'm doing is pointing out things that are inconvenient to people that don't look at the skeptical side of things. And I've said, I'm not short MicroStrategy. As a matter of fact, I have some exposure to the long side to Bitcoin. And so, I'm not I'm not talking my book here. I'm just trying to make sure that all of the cards are out on the table. And, there's nothing hyperbolic or disingenuous about pointing those things out and having
there's nothing wrong with pointing out the risks of leverage. But if you actually look at the mathematical facts to suggest that the thing's, in deep shit or there are problems, it doesn't line up with the facts. It doesn't. It's like you haven't gone and done the balance sheet analysis of what they've got. I've got a spreadsheet, an Excel spreadsheet model that I've built. Bitcoin's got to go down to $20,000 or $30,000 a coin and stay there for a bunch of years before this thing, you start to really get into serious dilution here. And to me, have Saylor and Fong changed what they're focusing on? Yeah, they're learning as they're going along. This is an emerging space. The facts on the ground are changing. I'm guessing that they had no idea that Stretch was going to get tested the way it got tested. I have to admit, I was kind of shocked. I thought the only way a 12% yielding preferred would trade down as hard as it did would be in a correlation of one event. And yet, no, everyone got freaked out and sold the shit out of it. And it went from, par to 75 very, very quickly. I was like, wow, okay, that's not good. What that to me indicated is the market was, and it happened after they used a lot of their cash proceeds in order to pay down debt. It told me the market was saying to them, hey guys, you're way out, you're out too far over your skis. You're too levered. And I, to their credit, they reacted and said, oh, okay. This is about, and my guess is what they're going to do now is they're going to sit on their hands for a while and wait for the Bitcoin price to recover. And by the way,
that would be the smart thing to do.
Yeah, it'd be the smart thing to do. And by the way, they can do that. They've got, 800 and some odd thousand coins. And the notion that they're selling and that's going to lead to some kind of a big, change in psychology. But they sold 1/3 of 1% of what they own. 1/3 of 1%. This is not heavy selling. This is, and they've got 17 months of the dividend covered.
We see that differently though. Like, I'm not talking about them, moving the market, and coming in and brutalizing the bid and destroying the market, with their sale. What I'm saying is now they're sellers and people are on notice that they can be sellers at any second. What I said in my article too was, if you're a holder of Strategy's preferred shares, there's a lot to like. This is about their new overhaul of how
Right.
They can be sellers now.
Yeah.
What I wrote was, it's a meaningful step forward. The company's creating dedicated cash reserves, formalizing its dividend policy, authorizing billions in buybacks, and introducing a more disciplined capital allocation framework, which I think is true. And I also said that I think that it is going to buy them time. So the idea that I'm out there, saying the company's going under tomorrow,
no, I know you're not.
It's just not there.
I'm talking about.
But what I am saying is that I don't like how, like you just said, management. You just said, I assumed that management thought Stretch was going to stay at 100 for a while, and then it didn't, and it surprised them, and it surprised you. And what I'm saying is that can happen also with the common. That can happen also with the price of Bitcoin. There are a lot of things being built on assumptions of what has happened over the last 17 years. And again, the great adage in finance on every piece of financial literature you can find is past performance is not indicative of future results. Right. And so there are a lot of beautiful charts and graphs and technical analysis. I saw technical analysis on 1 million equities that, I saw eventually go under because of whatever management wrongdoing or accounting fraud or whatever. And they ride the 200-day moving average and then they go straight down. And so, technical analysis is a backward looking at, it's a nice guide. I completely understand your chart that you posted. Yeah. And I'm going to just put it back up here again so that everybody can see it. Completely understand this chart, right? Everything about this chart looks bullish. It looks like it's going to do exactly what you said that it's going to do, that it's going to make a little bit of a bottom here. God knows where, 30,000, 50,000, 60,000. It's going to stay there. And then the next move is going to be up to 180,000. So it's not like I don't understand where you guys are coming from, because I completely do, but my argument is we've never been where we are right now with the equity markets in terms of valuation being stretched the way that they are, right? Yeah. We've never had a buyer or seller of this size that has basically staked their whole reputation on being, now, as we're saying, net buyers come out and say, all right, well, we could also be sellers at the same time too. Yeah. And they've also have, like I said, leverage and cash outlay obligations, as minuscule as they may seem to you right now. Layered on top of that, there are obligations there too. So let me ask you a question. Is there a situation you can see where strategy winds up going under, but Bitcoin makes it for the long haul?
Oh, yeah. I mean, I don't see strategy going under. Okay. I just say outright, I think there's very low probability that strategy fails. But I think Bitcoin's going to survive whether strategy does or not. I mean, okay. I think one of the mistakes a lot of people are making is that they're assuming that strategy is what's held up Bitcoin, and it really it's a piece of it, but it's not. It's certainly not all of it. 4%. It's not that big a number. There's the 96% is held by other people, and the 96% is growing. And so, I don't see. I just don't see it. I don't see that you need strategy for Bitcoin to succeed. I think Bitcoin is going to succeed on its own merits, and strategy will be there and probably succeed with it. But I could see, if for some reason strategy were to really mismanage it, get way over levered, we had a deep downturn and the whole thing blew up or whatever, I think Bitcoin would continue to live, because I think the idea of Bitcoin is it's a virus that's been planted and it just can't be stopped now. I mean, the notion, you see, we've seen all kinds of use cases. I mean,
that's one of the things to like about it too.
Yeah.
Is the fact that it will survive if people want it to survive. I've said also it's, kind of the digital equivalent of like power to the people, because
it really is.
If the government bans it, it can show up somewhere else. So I get that completely. Let me ask you one more question. You said you only think strategy has kind of been an incremental part in being a buyer. How much weight do you think Tether has had in being a buyer also too?
I think very little, actually. I mean, it's interesting, Chris. The whole world thinks these stable coins are a big deal, and thinks that, and Besant and the whole administration has kind of pushed these stable coins as like, they're going to save us and all. They're going to buy all these treasury bills. As you know, they buy treasury bills. I mean, Tether buys gold too, and gold equities, which we like. But I think that's kind of to me, that's like Doge. It's kind of a fantasy. I mean, these Tether and Circle are not that big. I mean, we're talking maybe $300 billion in the context of trillions and trillions of dollars of financial markets. I mean, the Fed has got to,
but as a percentage of Bitcoin's market cap, which is $1 trillion, that is substantial.
Well, yeah, but it's not all, it's not all Bitcoin. I mean, those guys, what they're really doing, they're not, they hold some Bitcoin, but that's not all that they hold. I mean, Tether really, what they really are to me, they got created when Russian reserves got grabbed. They're basically just a payment rail that allows the unbanked and the sanctioned to make payments. I mean, I was at the Prague Bitcoin show and I met some Russians and they said, look, when you guys shut us out of SWIFT, we were businessmen, we had to figure out how to pay for shit. So we got a Kraken account. We started using Tether, and Tether, although Tether, I don't know the breakdown right now of all of Tether's reserves, but the vast majority of Tether's reserves and Circles, as well as I understand it, are T-bills. It's not Bitcoin. So that 300 billion, I'd be surprised if 30 billion of that was actually, in Bitcoin. I think the vast majority of it's in buying T-bills, and of course that's why they're hoping it'll grow. But actually, I checked this recently too. Not by a lot, but in the last 6 months or so, stablecoin volume or total value of stablecoins outstanding has actually gone down. So the notion that stablecoins are going to get huge and save the Treasury bill market by buying up the $9 trillion that the Fed or the Treasury has to roll over every year. I mean, to me that's a fantasy. I don't think that's realistic.
And Tether has still not had a full independent audit, right? They engaged.
I don't know. I think they were moving towards that. I thought that was.
They did. I think they engaged BDO in March, but I don't think it's been completed.
Yeah, I think they were moving towards that. I mean, they basically came in from the cold, and as we now know, and actually this was relevant in the Iran situation. They've now they can seize stable coins. So stable coins, if you're Russia or you're Iran or whatever, if you're an actor and you're worried about the hostile U.S., in the olden days, if you were dealing with Tether, there was no way that they would grab. Well, I think that Tether ended up having to make a deal with the U.S. government where I've now seen and read, and I believe it to be true, that stablecoins have actually been seized. And so it was interesting to me that there was some press to support it, that when Iran started talking about charging tolls for letting people through the strait, the immediate discussion was, and it's going to have to be paid in Bitcoin. And the reason for that, I mean, there's the beautiful use case, right? Because you cannot seize Bitcoin unless you have the keys, whereas you can seize a stable coin. So, I think state, money that's, sanction proof, state control proof, fixed in supply, easy to store and easy to move. So in a sense, really like digital gold. It's just, to me, it's just a no-brainer that it's the next step in money and it's the future. And it's sad that guys who totally get the Austrian case, like Peter, just, rail against it and fight against it. And, the amount that he's cost gold people who've listened to him, it's tragic because, in my view, it is going to ultimately become equal to gold,
Right. First off, I always take exception. He says this too. Other people have said this to say he's cost people. People make their own financial decisions. He's not out there placing trades for people. People are well within their sound and sober minds to take everybody's opinion into account, including Peter Schiff's, and put them next to Tom Lee or Michael Saylor, and like I've done, and listen to the canon of their works. I've listened to probably 100 hours of Michael Saylor talk about Bitcoin. And I watched, Saifedean Amos on Lex Friedman's interview, and I looked at the Bitcoin Standard. So people are he's not coming to people's houses, and it's not to say that he's going to be wrong for the long term. He's just hasn't been right about its price to this point, and that's a fair point. That's a fair point, But
well, after 17 years, when do we decide he's finally got it wrong? I mean, look, people make their own investment decisions, but if you're in the investment business and you've given advice for 17 years that's dead ass wrong, well, then you're wrong. And
he hasn't.
And people who've listened to you, it's cost you money. And I know a lot of gold people who come up to me and say, I wish I'd listened to you instead of Peter.
What about the fact that he called out Alex Mashinsky for running essentially a Ponzi scheme, and
that's great.
3 months later, Alex Mashinsky's company had gone bankrupt, and he was indicted.
Great. That's great. And there are a lot of Bitcoiners who called him out. Corey Clipston and others. I mean, there are a lot of us who called out FTX. I mean, there were Bitcoiners who went to the SEC and the Justice Department and said Bankman-Fried is a fraud, and they didn't listen.
Right. And so he's just. I think he comes by his opinion. I think he comes by his opinion honestly. I don't think
that's fine. That's fine. But so I mean, at 25 years, will he still have the chance to ultimately be right? I mean, I suppose so. And if you look at it that way, that someday it's all going to collapse. But he doesn't even know the definition of a Ponzi, because by definition, it is not a Ponzi. It's a neutral monetary protocol. And there's nobody running it. There's nobody, a Ponzi scheme involves somebody who's, taking money out as they bring new investors in. There's nobody doing that here. So, it's just, it's disingenuous. It's disingenuous, and it's wrong. And it's about time that he admit it. But, if he wants to continue to believe it's going to collapse, so be it. It's just not correct.
Well, it hasn't been.
It hasn't been. I should restate that it hasn't been for 17 years. It has not been correct. And if you want to make that argument, I would say, okay, please explain what's changed that's going to make it go in that direction. There are only two possible reasons why it doesn't work, in my opinion. One is technical, difficulties, which I think 950,000 plus blocks and 17 years. Leads me to believe that they've got that ironed out. And I'm not at all worried about quantum based on what I read. And then secondly, that adoption, people just get bored with it and adoption slows. And that's the argument made by Grantham, that it's just going to waste away. And yet, okay, that's an argument for sure, but show me where that's happening. Show me where fewer people are buying it. I mean, we've now got central banks testing it. I mean, the Czech central bank had a pilot, test of it. I mean, the usage is just growing everywhere. So I don't see it. I just don't see it.
Yeah. I mean, look, those are fair points. I understand where you're coming from. Would you agree that Peter understands economics in general?
Oh yeah. Yeah, no, I agree. He's a decent Austrian economist, no doubt.
Would you agree that he understands, history and money and the history of money?
I would agree with that. Certainly up until the point when Bitcoin was invented. Yeah.
Okay. So, it's really just your beef with him really is just with his opinion on Bitcoin.
Well, yeah, but I don't think his opinion on Bitcoin is based on facts. I mean, I think he's conflating.
Well, if he's got a good understanding of, Austrian economics, like you just said, and he's got a good understanding about the history of money, which you and I both know he does. Yeah. Right. We both know that he understands what he's talking about when it comes to basic economics and economic history. Right. So, you're both kind of looking at the same facts and pulling different opinions from it is what's happening. So,
well,
obviously
there's one substantial
you spent
difference.
This interview kind of like calling him out a couple of times. And I'm just trying to figure out, like, you just have a difference of opinion.
No, Chris, we don't. There's a difference of facts. I've been right. It's gone up for 17 years. He's been wrong. That's a difference. That's a factual difference. That's not an opinion.
Over the course of 17 years, it's gone up, yes. But like you just said, if you bought it at 120 and it's at 60 now.
That is a fact. That's not my opinion.
No, sure. But we're talking about the future, right? We're talking about where the price is going to go.
The future.
He's forecasting that it's worthless, and you're forecasting that it's going to $1 million or whatever, right?
Right. That's correct.
Right. Okay.
And we won't know until a couple of years from now. But a couple of years from now, we'll have the same discussion, and there'll be more facts that I think will support my side of the argument.
Hey, and look, to be honest with you, I hope you're right. You know what I mean? Like, I don't really care whether or not this thing goes to zero or it goes to $1 million. I just don't think that, like, giving management of strategy a free pass is.
It's not really a free pass. I mean,
definitely is.
No, it's not. Do I think they've done everything perfectly? No, I don't. There are a lot of things they've done that I don't agree with. the AI slop and a lot of the way they, that he markets it. I'm not, I'm not wild about some of that stuff, but that it's not a free pass. But I think that they've been very, very adaptive to market conditions, and they're pioneering a new strategy. I mean, this is a new asset class, and a treasury company is a new strategy. I mean, no pun intended. Literally, this kind of thing never existed. Nobody. I mean, he's doing a speculative attack on the dollar. It's
for sure,
right, and so nobody's ever done that before, and so. Can he make missteps, and do they have to maybe change the strategy a little bit, or the messaging a little bit? Yeah, they do. But I'll say this, I mean, I think they've learned, along the way, and I think they've been very quick to adapt to whatever the market's telling them. And, my view is, and you conceded this yourself. I mean, the steps they've taken make this, the preferred look a whole lot better than it used to look. Right. I mean, it was the right way to behave given what happened to the preferred. So
that I agree with. Yeah. Is it, of course, because they're deleveraging a little bit by selling some of their Bitcoin and raising cash. So obviously that's a better way to shore up their balance sheet, as I wrote. But what I'm saying is, it's still very highly dependent on the price of Bitcoin.
Well, that's right. No, look, at the end of the day, if Bitcoin doesn't work, strategy fails, and strategy fails faster than Bitcoin.
What if Bitcoin goes to 15,000?
If Bitcoin goes to 15,000, the strategy shareholder is going to be severely diluted. I think the company will probably make it. I mean, Bitcoin going to 15,000 probably implies that Bitcoin is failing, but I don't know. I mean, it's, the history thus far has been that every low has been higher than the prior low in each cycle.
That's true.
And so by a substantial amount. And so, I think going to 40 or 50, okay, that's possible. I don't think it's likely, but it's possible. But I do believe that ultimately, we'll be back on, going to the next high. And, this, to me, this is just, the adoption. I mean, it shows you just how early we are in the adoption of this thing as digital gold, or as a monetary standard. I mean, most people don't understand it. Most people can't handle the volatility, and, that is what it is. But the characteristics of it, they just sit there. It's there, and you can trade on it. It's immutable. It's it's non-sovereign, etc. I mean, I know you say you don't care whether it wins or loses, but I can't. If you're truly the libertarian anti-statist that I believe you to be, my gut is you actually hope that it wins, because frankly, it's a sharper spear than gold. And if we want to kill the fiat monster, Bitcoin's got a much better chance of doing it than gold, because of the way they corrupted gold. So,
well, I concede that. I'd like it if it won. That'd be great. If it replaces fiat and solves the problems that we have that fiat have created, with basically living in this unlimited inflation era that we live in now, that just continues to enrich the top 1/1000% of people and brutalize the lower middle class. Me and you agree on almost everything, dude.
Absolutely.
We almost agree on everything. And from day one, that's why I get all these stupid messages. People like, oh, you used to be really bullish on Bitcoin, now you're not. It's like, no, I'm making a lot of nuanced points that are offending people because they're emotionally invested in Bitcoin. And what I haven't said is, oh, I think Bitcoin's going to zero, or I hope it doesn't make it. I've never said any shit like that.
No, I know.
All I've said is I think Fong Li is full of shit, and that seems to be the key point that me and you were disagreeing on. The one thing I said on Fred Krueger's Spaces the other day that, of course, everybody fucking took big offense to was, I don't know. They asked, well, where's it going to be in 18 months? And I said, I don't know. And he said, well, do you agree it's a good buy at the 200-day moving average? I said, I don't know, because, to be making technical analysis on a 17-year-old asset class that you and I both know, we don't know which way it's going, if adoption will continue or if it doesn't. Sure, you think it's more likely that it's going to survive than it isn't, but shit happens sometimes. For me to come out and forecast it's going to be X on X date, like he does on his Twitter. It's just not me. And that is what people took great offense to. That the fact that I came out and said I don't know, when really nobody knows. It's not just
nobody
me.
knows.
I'm just the only person saying I don't know. Everybody else got it all fucking figured out.
I don't have any problem with that. I don't know. I don't know where it's going to be. I tend to believe, absent some significant change, which in the adoption pattern, that it's going to continue to do what it's done for 17 years, which is go up and to the right. Now,
do you think an equity market crash could?
Oh, absolutely. I mean, look,
could affect the adoption pattern.
Not entirely. I mean, I think it, but I think it could hit the price. I mean, look, in a correlation of one event, it's going to go down. I mean, it's liquid, right? In fact, it's one of the most liquid things out there. You can sell it very, very quickly. You sell it 24/7. I mean, you can't access your bank account over the weekend. You can sell this thing. I remember watching it in 2020 when, that whole thing, when COVID broke out and they all got hit right before Powell came in with his anything it takes speech. And, it got hit about the same as gold at the time, as I recall. They all kind of got sold, as did stocks, as did bonds. In fact, the bond market went no bid, which is part of why he came out with his speech. But and so, if we get another one of those events, sure, it's going to be very volatile to the downside very briefly. I think that, what we saw there, and we saw that same thing in 08, and it's what I wrote about in my book, and because those were the first two big prints, is that we know with great certainty that the policy response to a correlation of one event and a drop of 40 or 50% in all the assets in the world all at the same time, leads to one thing. They're going to run the printing press incredibly hot. And,
right.
And the minute we know that they're going to, all those assets, rebound in price and go on to new highs. I mean, I remember in 08, I had a friend who was in the gold stock management business. His fund went down 60% in 3 months. And, and once the crisis was resolved and the money printing started, it also went up 100% in the next 4 months. So, that kind of stuff happens, and it could happen in this asset as well. But, I'm not playing to make money in 3 month, 6 month, 1 year timeframes. I'm playing for 5 and 10 year timeframes. And, the money, I want my money to be in things that can't be printed. And, the three that really qualify are gold, silver, and Bitcoin. And so, because I'm pretty sure that, where the policy response can be. I mean, it's an evil and dreadful game that the central bankers play on us, making us go through this bullshit and making people suffer through it and throwing everybody off the scent. And, it's horrible. It's absolutely horrible. It's equal to the way they've screwed the lower middle class by making them pay 24% on credit cards when Wall Street can borrow it, at basically the Fed funds rate. I mean, it's all a criminal system set up by these insiders who, get rich off it. And that's what we're trying to kill. And the way to kill it is to opt out of it. And the only way to opt out of it is to store your savings in things that they can't print. Again, gold, silver, Bitcoin. So, and the great thing about when Bitcoin came along, I think you'll agree with this, is there weren't many of us Austrian economists back when we were just in a gold world, because we were weirdos. And,
I do agree with that. And I wrote on more than one occasion that, like, one of my favorite things about Bitcoin coming to prominence was it shoehorned a giant monetary policy lesson into the brains of 1 million people in the younger generation.
Exactly.
And so I loved that. And as a matter of fact,
great?
yes, and it continues to be great, because, like, with the last round of printing, you would see all these memes and stuff popping up, basically just ridiculing Powell and ridiculing the central banks.
Yes.
For just printing unlimited money. So I think it has already done a great service in that regard. And in fact, I wrote an article when I first wrote, right after I wrote the article, Why Bitcoin, and went on McCormick's podcast to give my, again, nuanced keyword take on why I was buying Bitcoin at the time.
Yeah.
But I wrote an article thereafter called The Catalyst That I Think Could Standardize Bitcoin. And what the article basically said was, if we have another Zuccotti Park, Occupy Wall Street type of austere moment in markets and in the economy, which of course is going to happen. The only question is, how long will it take the Fed to react? But if that happens again, people are going to very vigorously and seriously look for an alternative. And that is a situation where I do think adoption and standardization could happen. Right. Do I think it'll definitely happen? No. Is it possible? Yes, that is a situation where I see it being possible. And again, I have written that I think it is the digital equivalent of the phrase power to the people, strictly on the fact that it, the adoption is going to tell the tale going forward. Absolutely. Having said that, price is an enormous psychological factor. So much so that Saif Dean Amos said to Peter Schiff in February of this year during a debate that if the price goes to $15,000, he will admit he was wrong about Bitcoin. And it will say that like upended the case for Bitcoin going forward. So
possibly.
Possibly.
I know he said
that's
that.
What he said.
I know he said that. I don't actually agree with it. I think it could go to 15.
You don't have to agree with him. He's one of the top people in the Bitcoin space, and that was his sentiment. And so the point I'm trying to make is that a lot hinges on price. Remove strategy from the equation. There is an enormous psychological element to this thing. And all I'm saying is we have to be mindful of that also, because if we get a 50% drawdown from here, and we go to 30,000, which might not happen. We might, but just as quickly as Fred Krueger can say on a Spaces the other day, hey, if Bitcoin doubles, they can just retire the preferreds. It's like, and if it goes down 50%, they can't retire the preferreds. Like anybody can speak in like best case scenarios.
No, absolutely. None of us know what's going to happen to the Bitcoin price, and the models are just models, and they can be broken. But it does come down to adoption. And if you do look at what it is, I think that over time, more and more people are using it, and it reminds me, I remember the Amazon case. I don't know what you were investing in at the time. I looked at Amazon a lot of times as a potential investment. I was a tech investor, and I believed in growing things that grew. And you know what the negative always was on Amazon, Chris, was that they weren't making any money.
Yeah.
That anybody could give away, could sell dollar bills for 90 cents, and that's a good business, right? Yeah. And because of that argument, I passed on Amazon. It always just seemed too goddamn expensive. I was like, well, where the hell's the earnings power? And what I didn't realize is that once you've got the entire, it is the monopolist strategy. Once you've got the entire marketplace, well, then the earning, and there's nobody around to compete with you anymore. You put all the small retailers out of business. Well, guess what? Suddenly you have earnings, you have pricing power, and suddenly you have really big profits. And of course, web services came along, a lot of other things. But the point is that, we're in that early adoption stage where there's a lot of FUD still left, and people aren't necessarily. There were a lot of people regarded it as a risk-on asset, as a strategy. It was the triple Qs all over again, all that as a tech investment, and all the Web3 bros. All that crap. No, it's really just digital gold. It's the only asset, it's the only financial asset with a fixed supply, and it's immutable. It's been working for 17 years, and it's got a lot of advantages over gold in terms of its ability to transact quickly and be stored for nothing and be verified very quickly. And so I think those
real quick, just on what you just said about another risk that people aren't talking about. You said, all right, you think we're still very early on with adoption. Somebody who wanted to argue with you would say, hey, like we have the most pro-crypto president in history in right now. There's probably no other better single human being on earth other than Michael Saylor to be at the helm of the presidency for crypto right now. Do you see Democrats winning in the midterms, House seats, Senate seats, or winning in 2028 as a risk? Because I just wrote a week ago an article trying to point out the fact that the Democrats may come in and make this their issue because it's Trump's issue, right? And so, do you think that they could try to throw a wet blanket on?
Oh, absolutely. But so let me give you kind of a nuanced answer. First, let me counter your view that this is the best president ever for crypto and for Bitcoin. Okay.
Who's been better than him?
Well, I don't know. I mean, arguably somebody who wasn't, there's only been him and Biden. But the point is, and Obama, I guess, since Bitcoin existed. But the fact of the matter is that I would, he's been a net positive in the sense that he has not, he wasn't Elizabeth Warren cracking down on crypto. But he's been a huge net negative in the sense that he's been an enormous grifter with Trump coin, Melania coin, World Liberty Financial, and all the other bullshit, and he just reported how much money he's made off of all this. And, that's extremely negative. And one of the biggest problems that Bitcoin has had to deal with ever since its inception is that Bitcoin and crypto are not the same thing. Crypto is often very fraudulent, very bad. And that's what Sam Bankman-Fried was all about. Bitcoin is actually a digital innovation. It's the creation of digital scarcity. It's a network that nobody owns or controls. And, a large number of people have come to believe that it's a store of value. The fact that we have a president who allowed it, that's good. But the fact that we had a president who was an enormous crypto grifter, that's bad. And that crypto grift, it rubs off onto Bitcoin. A lot of people look at that and they say, oh, well, that's just part of Trump and Bitcoin. And I hate Trump and fuck Bitcoin. So I would argue that he actually hasn't on balance been all that great for Bitcoin. And I certainly don't think he's been that great for crypto, although he's a perfect example of what crypto is all about, which is just, fraud and bullshit. To your point about the Dems coming in and getting after it. Yeah. I mean, there's no doubt that, they see how much money he's made on it. They see, CZ getting a pardon. They see, World Liberty Financial and what his sons have taken out of it. And yeah, they're very likely to want to go after that in some way, shape, or form. The problem they've got is that the horse is out of the barn. And, now BlackRock runs an FTF, an ETF. Fidelity runs an ETF. Millions and millions of their constituents own it. And by the way, it's ultimately uncensorable. I mean, they could go and grab the ETFs, and that's a 6102 risk. But I think that's unlikely to happen. And more importantly, self-custody Bitcoin, they'll never be able to grab. So, while I think that they'll probably come after crypto in some ways, I'm not sure how that extends to Bitcoin. And, if they'll be successful at getting after Bitcoin, I don't think they will be. Probably the only thing they could do is try to tax it heavily. But again, if you've got it in self-custody, they can't take those coins from you. And the whole notion of trying to tax something that's unrealized is pretty difficult. So I think it's going to be able to weather any political storm going forward.
So we agree on everything.
Yeah.
And let's just run down the list real quick, and then I'm gonna let you go. All right. So we can get a stipulation out there, because this is the discussion that almost caused us to stop talking to each other, which would have been horrible. You know what I mean? Like you're talking about your book. I got your book on the shelf right there. I came.
No, we do agree on everything except for Fong Li. I think Fong Li is an honest actor, and you think he's a bad guy, but that's okay. I didn't say
I think he's a bad guy. I said I think he's talking out of both sides of his mouth, and I think that he's giving the company. That he's given the company a credibility problem. But we both admit that we don't know where the price is going to be 18 months from now. We both think that the equity market could pose a risk to the price. We both agree that adoption is the key metric with Bitcoin, and that there's a huge psychological element to that, right?
Yeah.
Okay. We both agree that the rest of the crypto ecosystem, which is about $1 trillion worth of air, is in fact more than likely air and bullshit, right?
Yep. Right. Yep.
Okay, so we pretty much agree on almost everything.
Yeah.
The only difference, and we both agree that layering debt obligations and cash outlay obligations on top of MSTR Bitcoin pile makes it a riskier investment.
Absolutely.
Though it is not likely to go under tomorrow, or the next day, or next week.
That's right. I mean, there's
right.
no
So
doubt.
The only thing we disagree on is whether or not Fong Li is talking out of both sides of his mouth.
I think that's right. I think that's right. And I think that to your point on leverage, It's a fair point. And I think what the market just told them was, guys, you've gone far enough. You know, the sell-off in STRC, I got to believe that shocked the shit out of them. I know it shocked the shit out of me. And it was a wake-up call that, hey, hang on a second. You know, this whole strategy of getting all levered up, that's nice, and it's going to work really well on the upside. But, you know, be careful, because you get too far out over your skis and you got a problem. And it forced them to have to change their communications. There's no doubt about it. Well, let's not forget, Chris, that, you know, we're sitting here talking about all the downside, and I get all of that. And I get your skepticism. I know you were a professional short seller at one point in time, and I understand it. I understand you're looking at management teams and saying, hey, this guy's talking both sides. I get that. Okay, fair enough. I don't see it quite the same way, but fair enough. Let's not forget the potential upside here. Okay. There actually is really, really substantial upside. I mean, you know, the leverage implicit in strategy is about 40% of the leverage in BTC. Now, I've often said to people, you know, Bitcoin is such a volatile asset, you don't want to use leverage. And I do believe that. And my Bitcoin stack is much, much larger than my MSTR holdings, but I do have MSTR holdings. Why? It's kind of like, you know, you probably own a bunch of stocks that you know are solid and are going to grow at 10 to 20 or 30% a year. And then you own a few things that are real flyers that if you're right about them, they'll be 10 baggers.
Right.
And if you're wrong about them, maybe it's 5.
Exposure. Right.
Yeah. If you're wrong about them, it's 5% of your portfolio. It's not going to ruin your life. And that's kind of how I view MicroStrategy. It's a levered call option on the underlying Bitcoin. And I'm telling you, if Bitcoin does what I think it could do, you know, it'll go up 2 or 3x, and MicroStrategy will go up 6 to 10x.
I agree.
And so that's why that's the case. But what do you, you know, in so doing, you know, I mean, I'll tell you, I'll confess, my average cost on it right now is about 130. And I'm looking at my screen today, it closed at 93. So I'm down nicely on my average, and I own a lot of it. So, you know, I'm down very nicely on my average cost. I started buying a while ago. I thought at the last earnings call, I think it was, I was very convinced it had a lot of upside. So I started buying. I took a meaningful position. And here I am, I'm down, but I'm not selling it, you know. And in fact, I recently bought a little bit more, just a little. And, you know, here we are. And so, you know, I'll either be right or I'll be wrong. I mean, if the whole thing doesn't work out and it's a goose egg, so be it. I mean, that's certainly one of the possibilities. Or it's a possibility that we have a market blow up and a correlation of one event, and Bitcoin goes to 40, and this stock will probably get cut in half. I mean, the $85 it's at right now, it'll probably go to 40. Yeah, you know, I don't think I'll sell it because I don't need to sell it. But on the flip of that, you know, so that's the downside. I could lose another 50% of my money from here, and that would, at 40, that would take me down. Well, hell, I'd be down 70% on my on my 130 cost. Okay, but let's play the other side. Let's say, you know, Bitcoin finds a bottom around 50 or 60, which I think it might. And then let's say, you know, a year and a half from now, Bitcoin's at 180. You know, MicroStrategy is 600 or 700.
I agree with you.
Right? And 600 or 700 when it's trading at 80 or 93 right now, that's interesting. You know, so that's kind of the bet, right? I mean, it's just an economic bet based on where we think the price of Bitcoin will go. And
yeah,
I'm bullish on it, you know.
I totally understand it. Like I said, I have exposure to the long side, and I don't want to say that there isn't a bull case, because there is.
Yeah.
The only thing is, all day, everywhere you look, everywhere you go, you get the bull case.
I get it.
But you don't you don't get people pointing out little things like, hey, they removed Bitcoin yield from their tweets, or hey, he said 4 months ago on CNBC they're not going to sell, and now they're selling. There's a million people out there that'd be happy to tell me, well, they're not net sellers for the quarter, or they're not net sellers for the year, or it could go to 600. My only gripe is to even just come out and not even be outright bearish, to just say we don't know where things are going to go. And this is not as surefire, risk-free of an investment as a lot of people are making it seem.
I get it. No, I think,
which is why I wrote that piece, because in this market environment,
I think you're doing listeners a service on balance. I really do. And I just, you know, I think my general belief is that it's going to work. I think you're a little more skeptical than I am on that, and that's fine.
Sure.
And that's okay. And, you know, look, I mean, the proof will be in the pudding.
Yeah.
And if I'm wrong, I'll confess I'm wrong. I mean, we'll have to go and see. I mean,
I hope I'm wrong and everybody gets rich. I really do.
Yeah. Well, it's, we'll just have to see. The market will tell us. But, my view is it's a very interesting situation. I think it's one of the more asymmetric bets right now. I mean, just as an aside, I think some of the silver stocks are also very, very asymmetric bets right now. I mean, silver was stuck, as you know, at $50 ceiling for 40 years. Broke out, went to 120. Okay, got ahead of itself, corrected back to 60. But the history of a breakout is you don't correct back to come to the base and then go below the base. No, the next leg up is going to take silver to 200 or 300. And, the silver stocks are trading like we're going back to 50. And so, while I see a 3x upside in Bitcoin and a 7x upside in MicroStrategy, I got a lot of silver stocks where I see a 5x upside too. So,
and I think honestly, you said before, well, is gold really going to go up 3x? I actually think it could. I think on the next big print, it will. I think Bitcoin will probably.
On the big print, it will.
If Bitcoin, if Bitcoin has not lost confidence by then, it will probably outpace it to the upside.
Well, let's specify a couple things. Let's specify because I think there are two potential models for where we go here. I think one is just worse cuts, and they're gonna. I mean, we all agree they're gonna kind of try and run the economy hot. I mean, Trump has said he wants to have 13% GDP growth. Well, you can get 13% GDP growth, but it's with high inflation. Okay. And so let's say they do the run it hot strategy and they lie about the inflation. The task
which
force
they have to. That's what
they have to, right? So I think in that case, gold goes to 7,000, 6,000, 7,000. Which is that's up 70% from here, but it's not 12,000. Okay, and I think in that case, Bitcoin goes to call it 150 to 180. Okay, so that's a 3x from here. Okay, good. Let's say something really breaks, like the bond market pukes and just Japan blows up and everything blows up and we get big print number 3, because one was 08 and number 2 was 2020. So now we get the third one, and Fed balance sheet's not going to be at 6.7 or anything. It's going to 18. Okay, like it's very clear. They come in and they're just fire hoses of money. Okay, in that case, gold's going to 15 and Bitcoin's going to 400 or 500. And silver's going to 500. I mean that's kind of a new, and at that point in time, I think the entire, and by the way, the stock market, maybe it goes up, maybe it doesn't. It probably goes up in nominal terms, but I don't think it keeps pace with these other two things. And the reason for that is just that, the inflation is going to be so high that that's going to eat into corporate profits. So, because if you look at the 70s, the stock market kind of,
that's what happened.
Yeah, it went sideways, right? So I think in that scenario, it's all going to go a lot higher. And at that point in time, everyone's going to realize we got a real monetary problem. And hopefully, the Warren Davidsons and the Thomas Masseys of the world are going to step forward and say, we got to do a monetary reform, because that's the solution. The underlying solution to this entire friggin' problem is a return to sound money. And that's one thing I think Peter and I would agree on. And he knows that. I know it. All Austrians know it. And so we got to get there to have a better world, and we will get there. The problem is these bozos who are running the show are going to make us go through all these other steps first, and we got to try and protect our wealth in those other steps.
Right.
And it's hard. It's really, really hard. I mean, I feel sorry for, people, and, I feel sorry for those who don't get it. And even those of us who get it, I kind of feel sorry for all of us, because these guys are making us go through a goddamn roller coaster ride, and they've been doing it for 20 years, and they're going to continue to do it until we fix it. And so that's the bright future that I think we all have to look forward to in this fourth turning. We return to sound money, but unfortunately, I don't see us. It's not happening tomorrow. It's going to take some time, right?
Well, we agree on everything. We agree on the direction of the economy. We agree on what the proposed solution is going to be. I think we both understand what's going on here. Literally, we just have this small little wedge in between us.
Yeah.
Because I look at an asset, that's 17 years old and say there's more risk here than people are letting on. And you look at it and say it's the future. And, we can both be right. It can be the future, and there can be more risk than
that's right. I mean, we are both right. It is risky. The volatility tells you it's risky inherently.
Right.
Okay. So you're right about that. And I've always said to people who ask me, how much should I buy? I say, buy an amount where if it goes down 50%, you won't panic. Right. Because in the longer run, it's always gone to higher highs and higher lows. And I believe that pattern will continue. If that pattern gets broken, I'm wrong. Right. We'll have to see. And you could be right. That pattern could get broken. There's no ironclad law, model, technical analysis, anything that proves that pattern will be broken. It all comes down to adoption. We agree on that. So
no matter what you think about this shit or equities or macro or any of those things, and no matter what I think about them, none of this shit is ever personal. We're here to try to hash out what the fuck is going on in the world. I love you as a person. I consider myself lucky to be your friend. I love your book. I speak very highly of you to everybody, and so and I appreciate you. I appreciate you talking to me.
The feeling is completely mutual, and I respect what you do, and I think you're doing a great service. And having a skeptic, or a devil's advocate is a good thing. Particularly in the investment business, if everybody's some great general said, if everybody's thinking alike, then somebody's not thinking, and so
I put that in a presentation actually.
Yeah,
that was in my gold presentation in 2018 that I did.
Yeah, I mean you're providing a great service, and so and we keep it respectful and look, let's just see what happens. I mean, I think over time. I think over time I'll be right, but there's certainly the possibility that there could be some rough sledding between here and where we get to. I'm the first to admit that, and you point that out, and that's a good service to your listeners. So I think people need to be prepared for volatility. I mean, I would point people to, and I think you're aware of it, the Myrmikan chart that shows how volatile the German mark was from 1918 to 1923 when it failed. In gold terms. I mean, there was just incredible volatility. And sadly, I think we're going to have to endure some of that as well.
Yeah, well, the Chinese say, may you live in interesting times. So
yeah, exactly.
Just let's not stop the dialogue. All right, brother?
Let's
talk again in a couple months.
Okay. Sounds good. Sounds good, Chris. Thank you.
All right. Thanks, Larry.